Welcome back to the Business Basics Hub. Today, we're taking those complex business structures and breaking them down into a clear, easy-to-follow explainer for all you beginner business owners and licensed professionals out there. Look, if you're getting ready to open your own practice, choosing the right business structure is literally one of the most critical steps you're going to take. It sets the foundation for your daily operations, your taxes, and most importantly, your personal protection. So today, we're comparing a general partnership with a professional LLC to help you figure out exactly how to protect yourself, your business, and your future. Quick heads up before we dive in, as you'll see on our standard intro disclaimer, this explainer is for general educational purposes only. It is not legal, tax, or financial advice. Laws and requirements change depending on exactly where you live, so you should always consult a qualified pro for your specific situation. All right, let's look at exactly what we're going to cover today. We'll go over what a PLLC is, why this choice matters, the pros and cons explained, the biggest beginner mistake, and finally, the steps to create your PLLC. Section 1. What is a PLLC? Let's get our basics down. So a PLLC, or Professional Limited Liability Company, isn't just some fancy premium upgrade to a regular LLC. It's actually a purpose-built entity that perfectly balances your need for business liability protection with strict state licensing oversight. This structure is meant exclusively for folks who need a state-issued license to do their jobs. We're talking doctors, lawyers, accountants, architects, dentists, therapists. You get the idea. Basically, the state wants to let you protect your personal savings from normal business debts, but they also want to make sure licensed professionals are the ones actually running the practice. It's all about maintaining the high standards of your profession while still giving you a modern, flexible business structure. Section 2. Why this choice matters. Why not just grab a partner and start working right away? Well, imagine you and a colleague start a clinic as a simple general partnership. If your partner makes a terrible clinical or legal mistake, a lawsuit could potentially come right after your personal bank account, or your car, or even your home. You are completely on the hook for their errors, which is a terrifying prospect when you've worked so hard to build up your personal savings, right? But here is where the professional LLC comes in as a vital shield. In most states, a PLLC protects your personal assets from the malpractice claims of your co-members. You are totally walled off from your partner's professional negligence, which means you can actually sleep at night knowing your family's financial future isn't tied to someone else's mistake. Section 3. Pros and cons explained. Let's be real, no structure is totally flawless. On the advantages side, the PLLC is absolutely incredible for keeping ordinary business debts, like your office lease, utility bills, or expensive equipment financing, far away from your personal savings. If the business ever struggles to pay rent, your personal house is usually totally safe. It also gives you that sweet pass-through taxation, meaning you completely avoid being taxed twice like some large corporations are. But we have to talk about the disadvantages too. It is a bit more expensive and complex to set up. Also, you can't just bring in anyone as an owner. If your wealthy uncle wants to invest in your new dental clinic but isn't a licensed dentist, he usually cannot be an owner in a PLLC. Finally, you've got dual compliance. You have to keep the state business office happy with annual reports, and you must keep your professional licensing board happy with continuing education and strict ethical guidelines. It's kind of a balancing act. Section 4. The biggest beginner mistake. Okay, I really need you to hear this loud and clear. If you personally make a professional mistake, you can still be sued personally. Let's say you make a misdiagnosis as a doctor or an accounting oversight as a CPA, the PLLC shield does not protect you from your own direct actions. Your personal assets can absolutely still be pursued. This is exactly why having strong, robust malpractice insurance is 100% non-negotiable. The PLLC is an amazing business structure, for sure, but it doesn't replace the need for great insurance and solid professional habits. It protects you from your partner's mistakes and general business debts, but at the end of the day, you are always ultimately responsible for the work you do with your own two hands. Section 5. Steps to create your PLLC. With that warning out of the way, let's walk through a super clear, plain English roadmap to get you set up correctly. We've boiled the whole shebang down to 9 simplest steps. Now, the first half of the process is highly dependent on where you live. For step 1, check your specific state's rules. For example, New York requires licensed professionals to use a PLLC, but California actually prohibits them entirely. Step 2, make sure every proposed owner has an active, valid state license in the same exact profession. Step 3 is massive, and honestly, it's the one people miss the most. In many states, you must get approval from your state licensing board before you can even file your business paperwork. Skip this, and your application gets rejected. Step 4, pick a business name that follows your state's naming rules, which usually means throwing the letters PLLC at the very end. And step 5, once everything is approved by your board, you finally file those formation documents with the state and pay your fee. Moving right along into the home stretch, step 6 is drafting a comprehensive operating agreement. Think of this as the official rulebook for your business. It needs to cover the big what ifs, like what happens if one of the owners loses their professional license or wants to leave the practice. Step 7, get a free employer identification number, or EIN, directly from the IRS website and decide how you want your business to be taxed. Step 8 is incredibly important. Open a dedicated, separate business bank account. Do not ever mix your personal grocery money with your business money. If you do, a judge can pierce your corporate veil and literally destroy the legal protections of your PLLC. And finally, step 9, obtain that professional liability insurance we talked about earlier, so you and your hard-earned assets are fully protected from day one. As we wrap up this explainer, please just take a quick second to review our standard outro disclaimer, reminding you that laws vary wildly by state. What works perfectly in Texas might completely fail in New York, so always consult a qualified professional to look at your specific individual situation before filing any paperwork. I really hope this made the complex world of professional business structures a lot clearer for you today. If you want more simple, no-fluff business guidance, go ahead and subscribe to the Business Basics Hub and hit that notification bell so you know the second our new explainers drop. Don't forget to like this explainer, and hey, feel free to share it with a friend who's just starting out and could use a little clarity. Now, I want to leave you with one quick question to think about. What is the very first step you're going to take for your new professional practice today? Let me know, and I'll see you in the next explainer.